You pay for car insurance every single month, but be honest, do you actually know what you're paying for? Because most people are either way overpaying or worse, they've got a giant gap in their coverage they don't find out about until they're standing on the side of the road. Let's fix that right now. Okay, car insurance feels confusing on purpose. It's a wall of jargon, liability, collision, comprehensive, deductibles. But once somebody explains it like a normal human, it's honestly pretty simple. So let's walk through what's actually on your policy, piece by piece. Your car insurance is really a bundle of different coverages, and each one protects you from a different kind of disaster. Let's start with the big one, liability. This is the coverage every state basically requires you to have. And here's what it does. It covers the other guy. If you cause an accident, your liability coverage pays for the other person's medical bills and the damage to their car. It does not fix your own car. It's there so that when you mess up, you're not personally on the hook for somebody else's hospital bill or their totaled SUV. Liability comes in two parts: bodily injury, which covers people you hurt, and property damage, which covers the stuff you wreck. Next up, collision. This one's straightforward. If you crash into something, whether it's another car or a telephone pole, collision pays to fix or replace your car. So if liability covers the other guy, collision covers you in a crash. Then there's comprehensive, which I think of as the everything else coverage. This handles the stuff that isn't a crash. Your car gets stolen, a tree falls on it, hail dents the roof, a deer jumps out, somebody breaks your window. Comprehensive's got you for the random acts of life in Mother Nature. Now here's a word you'll see everywhere, the deductible. Super important, super simple. Your deductible is the amount you pay out of pocket before the insurance kicks in. Say you've got a $500 deductible and you get into a fender bender that costs $2,000 to fix. You pay the first $500 and insurance covers the other $1,500. And here's the trade-off that controls your monthly bill. A higher deductible means a lower monthly premium because you're agreeing to cover more yourself. A lower deductible means a higher premium. So if you've got some savings to cover a rainy day, bumping your deductible up is one of the easiest ways to shrink that monthly payment. And real quick, the premium is just the fancy word for what you pay every month or every 6 months to keep the policy active. Now let me tell you about the coverage almost everybody skips, and it drives me nuts because it's the one that saves you. It's called uninsured and underinsured motorist coverage. Here's the scary truth. A huge number of drivers on the road have either no insurance at all or barely any. So picture this. Somebody with zero insurance slams into you and totals your car. Without this coverage, you're stuck chasing a broke stranger in court for money you'll probably never see. With it, your own policy steps in and covers you. It usually costs a few bucks a month, and people skip it to save pennies. Don't be that person. This is the one I'd tell my own family not to cut. There's also medical payments coverage, sometimes called PIP, depending on your state, which helps cover your own medical bills after an accident, no matter who's at fault. Worth having, especially if your health insurance has a high deductible. Now let's talk about a trap. Every state sets a minimum amount of liability you're legally required to carry, and a lot of folks just buy that bare minimum to save money. Here's the problem. Those state minimums are usually way too low for the real world. If you cause a serious accident and the damage blows past your limit, guess who pays the difference? You do, out of your own pocket. So the minimum keeps you legal, but it might not keep you protected. For most people, carrying more than the minimum liability is cheap peace of mind. So how do you actually save money without leaving yourself exposed? A few moves. 1, shop around. And I mean really shop around. Get quotes from several companies because prices for the exact same coverage can swing wildly. 2, bundle your car and renters or homeowners insurance with one company for a discount. 3, raise that deductible if you've got an emergency fund to back it up. 4, ask about every discount, safe driver, good student, low mileage, paperless billing. They add up. But whatever you do, don't save money by gutting your liability or dropping uninsured motorists. Cut the fat, not the protection. One last thing, if you've got a newer car with a loan, look into gap insurance. If your car gets totaled, regular insurance only pays what the car's worth now, which might be less than you still owe. Gap coverage pays that difference so you're not making payments on a car that no longer exists. That's another quiet one that saves people from a nightmare. Bottom line, liability covers the other guy. Collision and comprehensive cover your car. Your deductible controls your monthly bill. An uninsured motorist is the coverage you do not skip. Know what's on your policy, ditch what you don't need, and keep the stuff that actually saves you. That's how you stop overpaying and stop leaving yourself exposed. Next video, I'm breaking down exactly what to do in the first 5 minutes after a car accident, because doing it wrong can cost you your whole claim. Subscribe so you're ready before you need it.